I'm on a cruise with Virgin Voyagers. You see my background? Still got to work. Things got to get done. Paying off a home early is essential. It's very important. My goal is to pay off our home early. So we purchased a home in 2021. It is now 2025. By 2027, my goal, the home will be paid off. That's 6 years. Because we're taking money and we're putting it towards the principal. You can put $100, $200, $300. The more you put, and yes, I put more money than that on the principal. I'm going to keep it 100% with you. So because, I have all these different businesses that is coming in. I have the healthcare agency, the after school programs, I do financial education, all these different things that are coming in. The more that you have coming in, the more income that you make. I don't want to ever communicate anything to you and bring you false advertisement saying, hey, when you put $100 down, your house will be paid off so quickly. And that's not such the case. But I don't care what you have. I could care less what you got. Put it on the principal, because when you don't put it on the principal, you're paying all that interest. And the whole thing with a mortgage, you have these 30-year mortgages and you're in there forever. Now, they may not be your thing. I have taught plenty of people that are cool with where they are. They're going to pay their mortgage down for 30 years. That's fine. I'm talking to people such as myself. I do not like mortgages. I need a house to live, but that's not something huge. I don't want to pay a huge bill for the rest of my life. That's just me personally. That's not something that I personally want to do. I know we have to pay bills. You still have taxes, insurance, and all of that when your mortgage is paid off. But I personally do not want to pay an actual mortgage. That's my business. That's me personally. But coming to you as an investor, as a person that own a home, as a realtor, as an entrepreneur, all these different things, I see a lot of money that is moving and coming in. So when you have stuff that is coming in, and now, I'm talking to individuals that you're all out here in the social media world and you're making a little bit of change, all this money. But what matters is you have a home, you want to own that home, because you don't own anything until you're not paying for it anymore. I don't care what nobody's telling you. You don't own it until you're not paying for it anymore. Now, you can take money out and you have your assets, and you can also sell it, and amazing, you can do that, right? But in order to really truly own it, you want to have the deed. So I'm not going to get all into that on this video. I'll do another video. But I own my commercial building because I have the deed to my commercial building because I paid cash. Completely different. It was done in 30 days, the best investment ever made. And then I was able to take that cash and get other investments. And so when you own something and you have the paperwork, it's a little different than when you're paying monthly on something. It feels different. It is a little different. But I want to encourage you that the more that you live and the less, and I'm about to say this, and I know y'all like, no, she not. But yes, I am. The less you pay on vacations. The girl that's in her cabin, right? The girl that's in her cabin right now while we cruising, the less you pay on vacation, because I can do that, because I set myself up to do that. But for you that haven't set that goal, if your goal is like my goal, let's just keep it real. If your goal is like my goal to not pay a mortgage, you may not want to cruise, you may not want to vacation as much until that is done. Now, should you live? Yes. My mantra is to invest, save, and live. I say that on my book, Whipping That's Ass. Invest, save, and live is my mantra. And you gotta do it, right? But at the same time, I'm really talking about carving out money when it comes to your principal, right? So if you have a goal, and let's say you're in an apartment complex and you say, you know what? And I don't go out to 5 years. I go out to what we going to do in 30 days, what we going to do in 60, 90 days, and in a year. Then what we going to do again 60, 90 days, 2 years, because you need to have your goal set. So we're talking about applying money on a principal. You want to make sure that you are putting down enough money that can carve out that principal. Again, if that's $100 and that's what you got, then you know what? You just help yourself out with $100. If that's $25, you just help yourself out with $25. But the majority of you, instead of doing these things that we do with our money, getting these expensive bags and, as I look at my Louis bag. But you know what? That's because I'm keeping it real. That's because I can do that, but I ain't doing that no more. Learned my lesson, not doing that, not giving Louis Vuitton my money. But the point that I'm trying to make, to not get off topic, seriously, is that you want to make sure that you're allocating your money and you're putting your money on the principle of the home. I am completely serious, because you're able to knock it out. So instead of it, even though I went into a 30-year contract, I'm not going to pay 30 years for my home. It's going to be 6 years. If I could get that down, because my goal was 5, but I started doing some things and it's not going to be 5. But if I can get that goal from 6 to 5, I'm great. But you'll say, Stanell, well, damn, what you doing from taking your house from 30 years to 6? Because I have so many different streams of income, right? That's the point. You have so many different streams of income. So instead of honestly wasting the money on credit card debt and cars, my biggest thing, I will talk to you about it all day. I do not believe in a car note. Not me. I don't believe in a car note. I don't. I drive a 1997 Lexus, all gold. Everybody and their mama want my car that knows good cars. It is amazing. It drives like butter. Love it, love it, love it. I love older cars, but I just don't believe in car loan debt. That's just me. I don't, you're not going to see a car on my credit. You're not. I did that. I've been down that road before, and I'm never going back down that road. And the reason why I'm never going back down that road to have a car loan debt is because you can't move. I can't move the way I want to move. When I got this commercial building, even though it was cash, I still had to, show my finances. You want to talk about assets and liabilities. When you are showing anything, lines of credit, whatever it is that you're doing, you have to show that money. When you have a car note that depreciate the moment it leaves the lot, it's not helping you. It doesn't help me. So I'm not going to do it. I will pay cash money. And I have. I mean, my car was $3,300, but I'll pay $25,000. I'll pay $50,000 cash before I get a car note. I just will. I will never get a car note, because now I can't take that money and apply it to my principal. You say, oh, well, so now when your house is paid off, will you get a car note? No, ma'am, because I am an investor. I need money always flying, always, so I can get another property, another property. I'm not in the cars like that. I'm into investments. So, anybody that is into cars, I get it. That's your thing. I understand. But it's holding you back because you have a car note and now you can't put money on your principal. That $500 you putting on your car note, 300, that could be going on your principal while you still driving a car, a different car. It could be hey, I love my car, whatever you say, but you still driving the car. You can relieve that money and put it on your principal. So please don't anybody say what you can't do, or when you talk about, because a lot of times we be in other people's pockets, because I'm sure y'all in mine, but don't be in mine. You can't, don't calculate my assets. No, because you're like, oh, well, she have a healthcare agency. Oh, well, she have this. No, I don't have bad debt. I don't have a car. And that's my truth. That is my truth. When I did it, I'm telling you, I wrote about this. I can't stand it. I had a Chrysler Aspen. I was paying $525 a month. My husband, his maximum, we was paying $537.